Cool. I think we're probably just about there with people. Yeah, I mean, happy to get kick-started then if we've got people and anyone else who joins afterwards. We'll be covering everything a little bit later anyway. But yeah, hi everyone, and thanks for joining the ultimate guide to R&D tax credits. We'll hopefully be going through all that you need to know in 60 minutes. I'm Maddie, and my co-host is Johnny, and we've helped thousands of companies claim for R&D tax credits together. And yeah, would obviously any questions that you have, you'll feel free to ask them at the end or throughout. But essentially 60 minutes is quite a short amount of time to go through everything to do with the R&D tax credit scheme. So what we'll be covering today is kind of an overview. What you'll have is the recording sent out afterwards, as well as the ultimate ebook as well, the ultimate guide ebook. So that goes through all R&D tax credits in a lot more detail for you. Obviously, we'll have time for questions as well. So if you'd like to submit some questions, feel free to do so throughout, and then we'll cover those off at the end. But let's dig in.
Cool, thanks, Maddie. So I guess probably just to kind of start us off, just to give you guys a little bit of information about Empowered, who we are. I guess if you can tell by the webinar, we're R&D tax specialists. So Empowered, we came into the market about 5 years ago. We were the first R&D tax specialists to implement tech into how you claim for R&D tax credits. And what we do is we partner tech with specialist advisors to be able to create a claim in an efficient way, but also in a way that really makes your claim robust when it is eventually submitted into HMRC. So we're part of HMRC's consultative committee. This is a select group of advisors which have a really close working relationship with HMRC. So it allows us to adapt to the market really quickly. So we really, we strive to, make your experience efficient, but also at the end of the day, have a really strong claim to submit to HMRC. And we do all that through competitive pricing as well. So 5% is our max pricing grade. And yeah, let's move on.
Thanks, Johnny. So what we'll be going through today is initially starting off with what are R&D tax credits and how they benefit me, finding out are you eligible to claim, and under that which costs qualify, then working out how much you can claim, and then we'll go through how do you make an R&D tax credit claim and how long does it take to actually receive those funds. And finally, we'll go through how you can optimize your claim. Now, there'll be time, like I said earlier, at the end for a Q&A. So if you do have any questions, feel free to submit them in the chat. We've already had some submitted prior to this webinar starting, so we'll be able to go through those at the end as well. But any extra ones that pop up throughout, send them in the chat and we'll cover those at the end. Like I said, what we'll be starting with is what are R&D tax credits and how do they actually benefit me? So the scheme itself is a government scheme, and there are loads of these schemes across loads of different countries. We're not the only country to do it, but we do have a really good scheme in place in the UK, and it's a really competitive one as well. Within the UK scheme, it was something that was launched in 2000, and it was launched with the aim to drive innovation through research and development work in companies that are based within the UK. It does mean that there are certain costs related to research and development that can be claimed under. Now, it is a tax scheme, so you claim under it. It's kind of called a grant tax relief scheme, and this is where you're claiming back those costs. But obviously, what we'll go into in a lot more detail later is the costs you can claim and how you can claim them. A general overview, however, is that you can get them back either in the form of a corporation tax bill reduction, or getting paid towards that corporation tax bill, or you can get it back in the form of cash in your bank account. As you can see, there are two separate ways to claim within the UK. So we have two separate schemes. There is the SME, which is aimed towards small and medium-sized businesses, and there is the RDEC scheme, or the Research and Development Expenditure Credit Scheme, which is typically for larger businesses or businesses which have received some form of grant funding. As you can see, you actually may be eligible to claim under both, but what we'll do is cover that off in a lot more detail later for you. Now, the scheme is amazing. Companies can get back so much through it each year, but it is quite complicated. It is a scheme that actually constantly evolves. We're constantly looking for better ways to drive GDP and make sure that, you know, they're getting a better return on investment on the scheme. This means that most of the time you see changes announced in the autumn budget as well as the spring budget as well. So that's twice annually. And you'll see we've obviously just had that spring budget. We've seen some changes that have been announced or set to be announced. And this will be something that we'll see a little bit more detail on in the autumn budget. Now, the scheme is amazing, but there's a lot of concern around fraud and misuse. There are a lot of companies accessing the scheme that maybe shouldn't be. So HMRC are really pushing on kind of cracking down on this fraud and increasing their scrutiny. Essentially, they want to make sure that everyone who is getting the R&D tax credits is getting it for the right reasons. But despite all of this, it is really a scheme that is worth engaging in. It's got huge potential to help your business. As you can see here in 2020, the scheme actually provided nearly 83,000 businesses with 7.4 billion in relief. And this is constantly increasing. We're seeing more and more companies become aware of the scheme and more companies accessing the scheme each year. So it's really, really important and very worth going through the process if you think you're eligible. Now, in terms of how the R&D tax credits can benefit you, I've kind of spoken to it a little bit. I've mentioned that you can get it back either in the form of that corporation tax bill, which is great, means it's less for you to pay at the end of each financial year. And I've also kind of spoken a little bit to the form of a cash injection for your business. So you can get the R&D tax credit relief as cash into your bank account. A lot of companies put this into, you know, wages, new marketing projects, new projects within the company, their teams. It's just a great cash injection in general. But also a lot of companies view it as a way to fund more research and development work to make your product even more competitive, to get it out in the market, to make sure that you are kind of ahead of all your competition, essentially. So it's a slightly different way to view it, but it's a great way to think of the R&D tax credits as a way to encourage more R&D within your company. And a lot of companies that are claiming with us currently see it that way. So yeah, lots of different ways it can benefit you.
Cool, thank you very much, Maddie. So this segment, I'm going to take you through basically, are you eligible to claim under the R&D schemes? And if you are, which costs qualify? So we'll run through it. The two kind of main criteria that we need to meet when we first kind of discuss, you know, as a company, are you able to claim under the schemes, are at a company level, but also at a technical work level. So at a company level, you have to be a UK limited company. And essentially the costs have to flow through that UK entity for you to be able to claim under the UK R&D scheme. You can be both loss-making and profitable. It's quite a common misconception that if you're a loss-making company, you know, you can't claim for R&D tax credits, but that's not really the case. Particularly the SME scheme that Maddie mentioned earlier is actually geared more towards loss-making companies. So the benefit is kind of increased if you're making a loss, to kind of really be able to provide you with the means to be able to reinvest in the innovations that you're making. And eventually kind of, you know, earn money through that, and at a profitability level as well. The benefit, as Manny mentioned, differs, and we can kind of go into a bit more detail later down the line. And any industry as well. So you can be software based, biotech based, manufacturing based, any industry that has, you know, technological uncertainties within the work that you're carrying out. And difficulties in those pieces of work, then yeah, that's another eligibility criteria that you're meeting, which kind of rolls into the second part. So really, what is the work that you're doing, and does it qualify as R&D? HMRC is a definition of R&D, which you'll see in a minute, and essentially, yeah, we'll go through you know with you and see if you're meeting that criteria. So HMRC's definition of R&D, as you can see, is quite wordy. So we'll unpack it a bit. But what they mean by R&D is when R&D arises when a business seeking a scientific or technological advance faces and tries to overcome a scientific or technological uncertainty through methodical experimentation conducted by a competent professional. So there's probably a few things in there that may not be, clicking. So yeah, like I said, we'll kind of unpack that and give you a bit more info about, where we can check those pieces of criteria. So what we've done is we've broken it down into 4 main items, really. So the first being new or improved product. So that could be, if you're in the software industry, manufacturing industry, yeah, you're making a new product and you're launching it into the market. So, from a manufacturing point of view, it could be, you're making a new drink, a really low calorie drink, and you're trying to figure out the best kind of ways to manufacture that product. Or if we even put it into context, Empowered, the Empowered platform that we use, like I said earlier, that we pair with our advisors, we build it from the ground up, and it's a new product that we're launching into the market to benefit us as a company and benefit our clients. So there's a lot of technical work in there, stuff that hasn't been done before, and that would be considered potentially R&D. And then we can have an improved product. So this could be an existing product that you have, or maybe an existing process, and it's making appreciable improvements. That's what HMRC calls it, at least, to the product. So kind of making some big improvements, maybe not small incremental improvements to your product. Maybe in the manufacturing process, you're trying to increase the efficiency of maybe waste lost through that process. That could be considered a criteria met, at least in HMRC's eyes. Then we move on to the scientific or technological advance. So this is essentially, the example here is maybe you've gone and found a third-party product that you may want to use and implement in your business, but it doesn't quite meet what you guys are looking for, because it doesn't necessarily kind of check all the boxes in terms of what you want that maybe software to do. So you have to go out there and build it yourself, and maybe you've done some research. Maybe there's not current existing technology out in the market being utilized at the moment, so you have to go out and kind of push the bounds of that particular piece of technology yourself. So you find a lot of learnings through it, and you create an advance at the end of the day. So that is another criteria that HMRC considers as R&D. So then what HMRC really looks for within your R&D claim submission is whether there was a technological advance or challenge, is what we would call it, within the R&D itself. So like I said earlier, maybe there wasn't an application out in the wider market that you could utilize and implement into your business. So it really created kind of a tricky development process. You had to go through iterations of the particular technology that you were developing for you to eventually have the outcome that you wanted, or maybe it didn't even end up with the outcome that you wanted, but there has been some development within that. This is usually undertaken, by your development team, but led by a skilled professional, which is, as it says in the 4th point, a competent professional, what we would call a competent professional. So this is somebody who has, the know-how, the experience, the education to understand what the difference is between standard development and what the difference is between, technical development that arises and causes, an uncertainty to kind of be made aware to your team when going through the development. So in point 4, as it says, you can have a competent professional, and essentially what they can be is, an engineer, both software or maybe on the manufacturing side, mechanical engineer, developers, so maybe your tech leads, your lead backend engineer, for example, scientists, skilled craftsmen. So essentially somebody, as I said, who's really got that education, or skill through work, through their workforce kind of experience, to really lead the project that you're working that could be considered as an R&D project. So the costs that really qualify for the R&D scheme, essentially HMRC has kind of grouped the costs together. We've listed them out for you. So we've kind of split some of them up. And what I'll do, I won't go through exactly all of them, but I'll take you through, the kind of headline costs that we most commonly see within an R&D claim and through that kind of cost discovery process that we go through. So the main headline cost being your R&D staff, so internal staff, your guys that are on payroll, you're paying PAYE towards, etc. These will be, your internal development team, particularly maybe if you're a small company, you might, everybody knows that a lot of people wear a lot of hats within businesses when you're kind of scaling up. So it could even be, some guys in ops maybe doing a bit of testing. We go through that phase of trying to figure out, what everybody has done. And maybe there has been some direct activity that somebody who necessarily doesn't usually work in R&D could potentially have within that process. But then it would also be, going through a process of rooting out those costs that aren't qualifying, the commercial based costs, maybe in the marketing, sales team, etc. Then we have your third party costs. So this is the work that you outsource, whether it's through what we would call a subcontractor, as also HMRC would call it, or an EPW, externally provided worker. There's a difference between the two. Subcontractors is very much, you're outsourcing it to a company, outsourcing the development to a company, whereas an externally provided worker is maybe somebody who's provided to you on a contractual basis that works with the team, but isn't necessarily a part of the company. These two costs have some limitations on how much you can claim for them. There's a 65% cap, as it says here, with the 65% cap being relieved, and you can claim a full 100% on it if you're a connected party. So yeah, whether you're a subsidy, parent company, sister company, or shared directorship between two companies. This is a process that we go through with you to determine what that relationship is. Then we have your R&D consumables. So this is the third main kind of headline area which HMRC allows you to claim for. So R&D consumables, it actually has prototypes and software that those kind of feed into the consumables section. So R&D consumables, if you're a software company, for example, these would be your software licenses utilized in the R&D process. So, maybe you've got some project management tools that you've used. Maybe you've got some cloud hosting costs for, your testing, staging environments that you've had to pay for throughout the year. And on the flip side of that, manufacturing. So, maybe you're making a prototype. So, the raw materials that are used up in that prototype process, there's a potential that they can be claimed for. And when I say potential there, that's if the prototype has been used for commercial use or hasn't, say, been stripped down or destroyed and maybe remade into a prototype, your eligibility is nullified. So that prototype has to be a true prototype in that it's made solely for the purpose of testing and then stripped down. And again, that iteration process then continues after that. So these costs, they need to be incurred within the financial year that you're claiming for as well. So if they fall out of the financial year, maybe they fall into a different claim. But we have to be very, very strict with that in that they can only fall in the financial year. So some of you may have been made aware of the recent budget announcements earlier this year, and especially in 2021. So there are some new costs that are coming into the scheme as the scheme is ever evolving, and HMRC and the government, they want to make the scheme more enticing to companies to be able to submit their claims and really kind of increase innovation in the UK. So cloud computing, as of 2023, that will be an eligible cost, certain areas of cloud computing. Now, as we're a member of HMRC's consultative committee, we were very close to knowing, you know, what was on the horizon. But obviously, yeah, earlier this year it was made fully aware in black and white that it will become an eligible cost. Pure mathematics. So pure mathematics is another area which was strictly non-qualifying. Applied mathematics was, but pure mathematics is seen, you know, as an area which only really kind of pushes forward the industry of mathematics, whereas applied kind of has a wide kind of spread on multiple industries. So pure mathematics, so maybe you have internal quants or external quants, for example, working with your development team. So they will eventually be qualifying. And lastly, overseas activities. So this is kind of a move from HMRC partly to increase innovation strictly within the UK, and maybe you've got a development team that's in South Africa, you know, the Southeast Asia, you know, Eastern Europe. There's the details on it are a bit vague at the moment. We'll know a bit more later this year for the eligibility from April 2023 onwards, but it's most likely that overseas development, unfortunately, will probably be heavily restricted in terms of what you can claim for. And the likelihood of it is, if the work can't be done in the UK and it has to be done offshore, then that will be eligible, but apart from that, it won't. But like I said, kind of, you know, when we understand more details about the mechanics of that, we'll let you know. And then finally, yeah, we've got some ineligible costs that we'll try and root out. And our part as an advisor is that we have to play devil's advocate. So usually what we'll do is we'll ask for costs to be provided to us, at least so we can give our opinion on them. And, you know, quite a lot of costs that we do see do hold kind of a common trend, particularly the first one. If you're, you know, maybe you've made a patent application and it's been successful, maybe unsuccessful. There's an argument made that, you know, it does relate to the development of the work that you're doing within the financial year, but unfortunately it's seen as strictly a legal cost, at least in HMRC's eyes. So that's, yeah, a large area which we'd kind of look to exclude from the claim. Commercial activities. So again, it's a common cost that we do see try and sneak in sometimes. It's strictly, unfortunately, non-qualifying. HMRC's perspective and our perspective is it's not really seen as a technical cost, you know, from sales or marketing, for example. So again, we'd look to exclude that. And then the distribution of your products and services as well. Unfortunately, that's maybe not so much of a common cost that we do see, but again, another one that we'll look to exclude. And land, and sometimes even a good portion of kind of utilities or rent that companies do kind of incur costs throughout the year. Again, is also something that we would look to root out. But yeah, as I said, it's our part to play devil's advocate with this, and really, you know, give our thoughts on what is non-qualifying and what isn't.
Thanks, Johnny. So obviously it's really important, as Johnny's gone through, to understand what you can claim for, what costs can be included, but you also then have to get to a point where you need to figure out how much you are actually eligible to claim under the scheme. And this is really, really reliant on which scheme you're actually claiming under. So I think it's probably worth just taking a quick step back to kind of almost go through what Johnny was saying, and that the qualifying costs that he's run through, as we talked about, there's certain things that are qualifying, certain things that are not. So what is best to do with any claim is to build up a full estimate of what costs are qualifying. So what costs are to do with your R&D, and basically get a figure in mind. And then based on that, under each scheme, there is a certain amount of those qualifying costs that you are able to claim back. So under the SME scheme, as you can see, you can claim up to 33.35% of those overall qualifying costs. Now with the SME scheme, these aren't subject to corporation tax. And as mentioned before, you can get these back either as a cash in your bank account or a corporation tax relief. Now, with the RDEC scheme, this is slightly different. With this, you can claim back up to 13% of your qualifying costs, but these are subject to corporation tax. But similar to the SME scheme, you can claim these back as either cash or a corporation tax relief. A question that we get a lot with this is, number one, why is there a difference in the amount that you can claim back under each scheme? Essentially, it's focused on the fact that there are different companies claiming under different schemes. Generally, larger companies, don't need as much back for their R&D. And if you're claiming under the RDEC scheme because of grant funding or state aid, it's because you've already received some sort of money from the government, which is why you claim back less, essentially. Actually, one thing to note is that we've seen HMRC looking at the RDEC scheme. It's likely that the benefit you receive from this will change in the future, and we kind of are guessing at the moment, but we think it might increase. But yeah, that's under review, so that's something to keep an eye on. Once again, there is, as it says at the bottom, no minimum or maximum amount that you can claim. Again, this is a really, really commonly asked question, is that, is there a lower amount that I can claim back? Is there an upper amount? There's actually no ceiling to this, which is why it's really, really important when you're going through your R&D tax credit claim to choose either the right advisor for you or kind of make sure that you're doing it fully yourself, because you could be leaving money on the table essentially if you're not going through your qualifying costs in depth. There could be stuff that you're losing out on. So yeah, you should definitely make sure that you're getting back the most that you can under the scheme, because there is no limit. Now, unfortunately, you can't just pick which scheme you'd like to claim under. You do have to go under the scheme which you fit in due to a few different conditions. So the first one that you should look at is your employee count. This is kind of the really easy quickfire one to see whether you will be put into the RDEC scheme or the SME scheme. And then it's just a case of looking at your turnover and your balance sheet. And as you can see from this year, you can find out which scheme you lie in, basically the SME or the RDEC. One thing to be really wary of when you're going through these checks and figuring out which scheme is right for you is that you have to take into account a group structure. So as you can see, different conditions apply for subcontracting SMEs or SMEs that are owned by big companies. So if you're owned by a big company, it's not just your employee count which will go towards this total count. It will be the count of your company and the parent company as well. If you're in a group, same applies. And this is for the employees, the turnover and the balance sheet. One other thing just to note is that obviously you can see the turnover and the balance sheet is in euros. Even though this is a UK scheme, it actually was basically done. It started, as we mentioned earlier, in 2000, so it's done under European legislation, which is why you've got the euros in there, and that is still correct. That still stands today. Those are the figures that we go off. As I mentioned earlier, you obviously can claim across both schemes. So this is kind of the bit where it can sometimes get a bit tricky. I'm not going to go into loads of detail on this because it's very specific for each company. If you've received grants and only used it on some projects, then you may be able to split up your overall claim for that year into a portion of RDEC and a portion of SME. So it's definitely something that if you feel like you have any of those more intricate claims, it's worth speaking to someone and figuring out what the best route for you to go down will be to, again, make sure you're getting back as much as possible for your company.
Thank you, Maddie. So you're probably thinking, right, it's all well and good, the mechanics of the scheme. I know, what I can and can't claim for, but how do I actually make a claim? So let's run through the mechanics of how you actually claim. So I guess it really starts off in what the expertise that you're pulling in and what resources do you have to be able to let you go forward and start making an R&D claim. So what we've done is we've broken out the four kind of main ways at least that you can make an R&D claim. What resources you can utilize within the process. Within the first three, you'll probably be able to kind of get a sense of it, but there's a bit of a theme going on, and we can kind of cover those off. So really, how you can make a claim, you can self-file is the first one, which we've broken it out into. So self-filing tends to be for if you've got a lower claim size, you might want to go down that route. And it's very much a DIY route of making an R&D claim. The expertise that you have, it's all in-house. So, whether you might have had somebody that's done an R&D claim before, you're hiring somebody specifically to do an R&D claim, or, you're one of your employees or a few of your employees just feel they can take this up as a project in itself and start working on it. So the process is very much data collection, within the team. Ultimately, an R&D claim as a whole is a self-assessment. So it's you looking internally as a business and recognizing what you've done and what costs you've incurred. How much this costs and how much time this takes you, it very much varies. Maybe the team isn't as skilled, may take longer and kind of subsequently cost you more money as a business to be able to process that claim. But you might have somebody internal who is pretty good at what they do, and pretty good at making an R&D claim. So it could be quite a quick process, but the real risk in there is what expertise you have internally. The second route is your accountant. So your accountant might offer it as a built-in service or as an add-on to what they're already currently providing you. Again, it can take a bit of time, partly because you are collecting a lot of the data yourself, but how you're doing that is you're provided with a bit of a structure by your accountants. Maybe they're asking you for specific costs, or they're just asking you for some technical data, what you guys did on a technical level, as part of what you would consider R&D. Their expertise tends to be very generalist in terms of they know your costs because they're your accountant, so you'd hope that they know your costs. But at least on a technical level, what constitutes R&D, what work you did, what challenges you faced, they're accountants, so it's not really their kind of remit to know the technical aspects of your work. So there is a high risk there in terms of, are you best showcasing your work to HMRC? The process, again, it varies. As I said, it's very much a template-based route. And what that does is it really kind of increases the amount of time that you spend on, preparing that claim, because a lot of it is coming from your side. You're spending a lot of time providing your accountants with that information. And as with the self-filing route, in turn, that can increase the cost as to how much you're spending, and essentially reduces the benefit you're getting back if you really think about it. And then we've got your traditional advisor route. So your traditional R&D tax advisors, traditional because it's very face-to-face. So it's a lot of emails back to back. It's a lot of phone calls, a lot of meetings to really kind of tease that information, both out of your finance team, but also out of your development team. The expertise, again, can be quite mixed depending on the advisor that you choose, and the process as well can be pretty mixed. But when you go down the traditional route, because they're not very tech-driven, tech-savvy, it's a low tech option, which that is the reason why there's a lot of face-to-face going on there. So the cost significantly increases, and in turn the fee increases. But generally the time frame is a little on the shorter side compared to the first two options that we provided. So yeah, it's another option that, again, if you couldn't tell, the theme is quite resource intensive, because it takes up quite a lot of your time. And then we've got the empowered route. So as I said at the very, very start, we were the first R&D tax specialists to bring tech into the mix. So the platform that we use really drives efficiency in the process in terms of really slimming down how much time you're taking actually looking for and presenting the data to us for us to be able to kind of take it on and review it. And it allows access to the platform whenever. I think when you're really growing a business, time can be quite limited during the working week, so it provides you with that flexibility in terms of when you want to enter that data into the platform. And as I said, the experience or expertise that we have, as I said at the very start as well, it's mixed with ex-HMRC inspectors. You know, we've just actually hired recently, and he's been doing really well, an ex-HMRC inspector and their head of risk, who's got, you know, 30 odd years within HMRC, so constantly adding to that expertise on our side. And then, you know, the platform allows us to really reduce, as I said, the amount of time that's taken on your side. You know, as much you kind of, you know, like writing about the development that you've done and really do obviously want to get that benefit back from the scheme, you really want to minimize the amount of time you're spending on this. So you can actually put it into, you know, the commercial activities that you might be working on, or actually, you know, the development. So that is the aim of the game. We've really reduced that 1 to 2 weeks, should be, you know, the maximum that you're spending on this. And that allows us to really provide a competitive price. 5%, as I said, is our max fee. And we're able to do that through implementing tech into our solution. So you've chosen who or how you want to prepare the R&D claim, but actually, what does an R&D claim look like? I think is a big question, and it can look like kind of many things, but really, what does a robust R&D claim structure look like? So the first kind of step in that process would be the discovery of your projects. So as I mentioned earlier, you know, the qualifying work that you guys do. So with your advisor, you'd go through, you know, a process of figuring out which projects do qualify, which don't, and which are the best to select. Ultimately, you only have to present at least 50% of the R&D within the financial year to HMRC within your R&D claim. And what that 50% looks like is the costs that are incurred and time spent. So essentially the resources used up within the process. So we get that selection and make sure that the criteria is met before implementing them and deciding to kind of push on and collect that data. As Maddie mentioned, there's multiple schemes. So the RDEC and SME scheme, or it could be a qualification for both. So it'd be a case of, you know, figuring out the mechanics of that, really, the eligibility on your side. So, you know, how big you are as a company, whether you are an SME or not. As Early said, you know, whether you're part of a group structure, maybe you've received, you know, an Innovate UK grant or another innovation grant dedicated to one of your projects. These all kind of feed in to that overall structure of the claim. And yeah, as Maddie said, then kind of feeds into that benefit that you can claim back. And then the claim size is ultimately also what you really want to know. So what the costs are that you're claiming for, as we've gone through, you know, what are the employee costs that you have? What are those third-party costs that you've incurred? What are the R&D consumables? And also trying to root out those other costs that could potentially be claimed for, but maybe you just haven't necessarily thought of. And then that altogether kind of feeds in to, you know, the structure of your claim, how you want to claim it back. As Maddie said, you know, you can claim it back in multiple ways in terms of the benefit. So you could claim it back as a cash credit, tax deduction, and if you are at least claiming it back as a credit, at least part of the SME scheme, HMRC allows you to enhance that expenditure. So enhance it and then take a 14.5% return off of that. But as it says here, if you know, in the accounts for the financial year, adding the R&D claim and its enhanced expenditure, so that 230% of your total qualifying costs, if that kind of results still in a loss, what you do to claim a cash benefit is you do surrender that loss. So that is something to be made aware of. So it's something that, you know, a company you might consider, do you want the cash, or are you eligible to be able to maybe claim it as corporation tax saving kind of going forward? And then what we do have is something that was implemented for financial years from April 1st, 2021. So starting on that date and onwards is what we have is the SME cap for PAYE. So essentially HMRC's drive to get a lot more work onshore, and as I said, not, you know, so much in your third parties that, you know, maybe in South Africa or somewhere abroad, it basically caps the amount that you can claim back if you're outsourcing all of your work. So it's a real drive to really increase innovation within the UK. And what that cap is essentially you take your PAY figures for the whole year, even for those employees that you're not necessarily claiming for, you times that by 300%, and then you add an extra £20,000 onto that. And that is your benefit, how much you can claim back. So essentially, if you're outsourcing all of your work, no employees, £20,000 is your cap for the financial year. So that's something to be really aware of kind of going forward, and where you're investing and how you're structuring your business also. But what, how at least the Empowered platform kind of plays a part in this is in terms of, at least on the project side of things, the structure that we provide you and the advice that we provide you through the platform, but also through the service that we provide through our experts, really kind of slimlines that process in terms of what projects you can select and which is the best way to structure them. And on the same side of things, the structure of your claim, whether you're going down the RDAC route, SME route, or both, it's all built in. So that's another worry that's not really looming over you. It's just more so you provide the data, and we figure that out for you. And then on the cost side of things, so how we ask your cost, particularly if you've got an accounting software, especially like Xero, the integration that we use really does kind of uncover the costs in terms of maybe costs that you wouldn't have necessarily claimed for either self-filing or with your previous advisor or with your accountant. That's something that the software really kind of brings to the forefront and allows you to really optimize your claim. So particularly with a client, one of our clients, Bloom Wild, through that specific Xero integration, we were able to kind of uncover a good amount of costs that increased their claim from the previous years by 290%. So it really does prove itself there. But on the flip side, if you're providing costs to us manually, it's a process of us really trying to tease that information out of you. So right, we've got the projects, we've got the costs, and we've got the structure. So we use that, and we write your technical narrative. So we get the real kind of, the project data that you have and the pain points that you have within the project that were causing those technological uncertainties. And we'd form a structure out of it. We'd ask, specific questions that are proven and are robust in how they end up in the claim report. And we take that data and, we write it up. Maybe your accountant, just takes the data and puts it in their report, or self-filing. Again, you're writing that data up, and obviously your traditional tax advisor will most likely write it up for you. So there's a various few ways in how that write-up occurs. But what's important to note, it's not mandatory at the moment, but there's a seriously high risk when submitting a claim without a technical narrative, even though it isn't mandatory, especially with HMRC's increased scrutiny over the past year and a half. So it's really important to have a technical narrative in your R&D claim report. How you actually submit the R&D claim report is essentially as an attachment to your CT600 and CT600L. In layman's terms, your tax return, if you're unsure what a CT600 is. So it essentially goes as an attachment to that, and it's submitted to HMRC with the R&D figures within those documents. And then actually, filing your claim. So yeah, it's a case of essentially submitting it to HMRC's API, or maybe the old-fashioned way by post. But I mean, in terms of how we tackle that, yeah, as I said before, we write up that technical narrative, making sure that it's as risk averse as possible. We again prepare those documents for you. So the CT600, CT600L, we apply the R&D figures for you if you want, and we get that all submitted to HMRC directly to their R&D team. So it really does smooth out the process. So how long does it take to get your funds, which is probably a burning question, definitely one that we do get quite a lot as soon as the claim's submitted, or even before the claim is submitted. HMRC is an SLA. which is 95% of their claims are paid out within 28 days. Something that ebbs and flows really in terms of time frame, but what we do see is generally on average 47 days is the payout timing, in and around that. With your busy periods, you know, December year ends, March year ends, it can increase kind of just after those periods, as you know, the volume significantly increases in terms of what HMRC's R&D team is processing at the time. So there's no guarantee, you know, it could be within 28 days, it could be more than 47 days. There's really no guarantee there. But what really can slow it down is an inquiry. So, you know, like I said before, it's not mandatory to submit a technical narrative. That significantly increases your chances of an inquiry. Or maybe HMRC just wants a spot check, or, you know, the costs kind of raise some red flags on their side, through, you know, non-qualifying costs being put in, or just that not enough detail really being put into your costs to kind of answer their questions through the review. So that really slows down the process. It can take, you know, anywhere between 6-12 months, kind of that type of time frame before you just even receive your funds, as you go through a lot of back and forth with HMRC to answer any questions that they have. So yeah, it ranges in terms of how quickly you can receive your funds. Something that at least we offer is advance funding. So being able to essentially get a loan against the claim before it's even paid out, and even before your financial year's ended. That's something that's a main criteria for being able to submit an R&D claim. Your financial year will have had to have ended, essentially. So yeah, it's something that we definitely offer, and there is a good bit of uptake in terms of being able to access those funds sooner rather than later. But at least from Empowered's point of view, we handle the whole process for you in terms of tracking your R&D claim, getting a status on it, and doing all that we can to, at least in our power, to try and get the repayment you know, processed earlier than possible. And even in the case of an inquiry, as I said, there's no guarantee that an inquiry won't take place, and if that does occur, we lead the engagement for you, and we kind of handhold you through that process to make sure HMRC is satisfied with the data that you've provided.
Great, thanks for that, Johnny. Yeah, the kind of last thing that we're going to cover off is basically how you can optimize your claim, and basically we've kind of come across these 5 main tips and tricks that we've had from working with thousands of companies so far. If you just go on to the next slide, thanks, Johnny. Yeah, basically these things are things that we think you should go to make sure that you're optimizing your claim, but there's a real big difference between maximizing and optimizing, and this is something that we want to be really clear on, is that maximizing your claim is a dangerous thing to do. It can result in inquiries, it can result in your claim being reduced. So what we use is optimization, where we look to include as much as possible in your claim, but not anything that could essentially wave any red flags to HMRC and get you either caught up in an inquiry or mean that your claim size will eventually be reduced or even rejected. So these are the sorts of things you can do to make sure you're hitting that optimization mark. A really important first one is to record the challenges as you go. We find that because the scheme is laid out the way that it is, it's a financial year based scheme, it goes kind of on a yearly basis. You can sometimes forget all that you've done within that financial year. It's hard to look back retrospectively and understand fully what you actually did in that year and what was a technological or scientific advancement. So recording these challenges can really easily make sure that you are keeping up to date with what you've done, you don't miss anything. It also helps in backing up your claim and ensuring that you can include more costs because every one of those costs is justified. It's something that we offer with our kind of empowered process, is that you can have access to the platform year round if you wanted to. So you're able to use that almost as a bit of a tracking of your costs, a tracking of your challenges as you go. Kind of obviously moving away from just the challenges, then the costs are a really big part of this. And as you'll see with 2 and 3, these points are super important in that you need to, number one, know what you can claim for. And this will then obviously help you track all of those costs that you can claim for as well. Once again, costs can get lost throughout a year, or you might not realise that some costs that you spent on a failed project or on a successful project that was seemed really hard at the time but ended up being simple compared to the next project that you went on to, can sometimes then at the end of the year be forgotten and actually left out. So knowing that all of these expenditures are qualifying and knowing and tracking those throughout the year is really, really important. Just kind of further compounding as well what Johnny's mentioned on that technical narrative. It isn't necessary, but writing a really compelling technical narrative is super important because it can often reduce your chances of getting into an inquiry in the first place, which is absolutely something that you want to be doing. Writing that compelling technical narrative as well also allows you to justify your costs, as I mentioned earlier, in a much better way, which actually allows you sometimes to include those costs that might have been uncertain, or you might not be sure whether you could include it or not. But if you write a really compelling technical narrative to back it up, then it's more likely that you'll be able to put those costs in. If you don't have any technical narrative at all, it's going to be difficult for you to really optimize your claim and include as many costs as possible. A really simple but thing that we do is say that you have to check it and check it and check it. You can't just kind of do one iteration of it and feel like that's done, because it's likely that you'll miss out on things. And this is where our process really comes in handy. You've got a team of people who are always going to be going through and reviewing your claims. So number one, we're going to be looking through all your costs and your challenges. But also, you've got multiple people that do each of these parts. So we're kind of doing that checking and checking again for you. I think that's pretty much all we have so far on the R&D tax credits. We've managed to do it within the 60 minutes, which is great, but it does mean we've got a little bit more time for questions if we have them live, if there's any that you want to pop into the chat or even unmute and ask us now. But I do think we have a couple as well that have been pre-sent in, so let us know. Well, I think we'll go for one of the ones that have been sent in then. One of the first ones that we had was, how far back can I claim R&D tax credits? John, I'm not sure if you want to cover that one off.
Yeah, sure. Yeah, let's go for it. So you can claim back, essentially you have a deadline on your R&D claim. So that's 2 years past your financial year end. Anything beyond that, it's just not going to be accepted by HMRC. And most likely if you're submitting it online, with a CT600 and CT600L, like I said, it will be rejected. So essentially, you've got 2 years past your financial year end to be able to claim.
Perfect. You've got another one as well, which is, can I fail and still claim? So essentially, short answer is yes. With anything, HMRC actually don't stipulate anything about not being able to claim for like failed projects. Essentially, if a project is something that has failed, it's probably very likely that it will qualify, essentially because a project has to be challenging. As Johnny mentioned earlier, you've got to face a technical challenge and try to overcome it. So in trying to overcome it but failing, you're still essentially doing what HMRC want you to do to qualify. You're doing the research and development activity. So yes, you can still fail, and you can still include that in your claim report at the end of the year. You've got another one, which is, what is the normal range to expect to pay for someone to help you with your R&D tax credit claim? Johnny, do you want to maybe have a go at that one as well?
Yeah, sure. So, I mean, the normal range, it can vary, like I said. It's very much dependent on what route you go down. If you're going down the traditional advisor route, it can be anywhere up to almost a third of what you're essentially getting back. But what we generally tend to see is kind of 10 to 15% is probably about the most average rate. But yeah, it's truly dependent on the resources that you're using, whether you're going through empowered, as I said earlier, maximum 5%, or whether you're hiring somebody internal, maybe you're self-filing. Completely, dependent. A bit of a vague answer, but dependent on what process you're going through.
Yeah, absolutely. You've got another one here that is, can I do more than one financial period together in a claim? again, with this one, you can technically submit kind of multiple financial periods kind of together in one claim report, but generally you will need to show a sufficient kind of splitting of those costs and lining them up to align with each financial year that you're looking to claim for. So if I was submitting 2 claims, I'd have to have a separate section to show the costs for one year and show the costs incurred in the other. Similarly, you do need to show sufficient evidence for technological and scientific advancement within each financial period. So if you've got, like Johnny said, you can have up to 2 years that you can previously claim for. You can kind of do these in tandem, but essentially you do need to be writing sufficient enough information to show that technological advance across each period almost separately. And it can't just really be a copy and paste activity for each year. Another one kind of on inquiries is, how likely is it that my claim will get inquired into by HMRC?
Happy to pick that one up. Yeah, I probably touched on a couple of the points I covered. There's no guarantee, and the likelihood as well, I think probably most likely depends on, the structure and how well presented your claim is. So as Maddie said earlier, presenting HMRC with a compelling and robust narrative to support those costs that you're claiming for, and not just submitting the costs, that really reduces the likelihood and minimizes that risk there. But just because you've minimized the risk doesn't mean there's that slim chance, HMRC might want to, inquire as a spot check, just to make sure that they're going through their process and their process works. But I think the key is when you're submitting an R&D claim, you want to submit it with the most amount of information so that essentially all their checkboxes are ticked before they even get to the point of thinking, okay, let's inquire to find out more information. So you can reduce the risk significantly, but you can't completely nullify the likelihood of having an inquiry, and especially with their scrutiny rate kind of really increasing since doubling their team size last year, at least in terms of their R&D team. It's even likelier that you could get inquired into if you don't have a solid structure when submitting to HMRC.
Great. Yeah, we've actually just got one last question, which was, I've heard that claim repayments have slowed down. Why is this? Kind of it goes on a little bit from what Johnny's been talking about, to be honest, is that HMRC is obviously really kind of clamped down on this fraudulent claims. They've improved their review processes, which means that now if people are still submitting, unfortunately, claims which are trying to abuse the scheme, they do have to go through this review process, and it's going to slow them down. It's going to take more time. Unfortunately, we don't know the exact reasons, and it is frustrating, for everyone involved. Essentially, we monitor the situation really closely with HMRC, and we've always got that advance funding as an option should you wish. But yeah, unfortunately, that's kind of it's both a benefit and it's stopping people who shouldn't be claiming from claiming. But unfortunately, it does have a bit of a knock-on effect on the people who are waiting for their claims to be paid out. That's kind of all from questions on our end. Obviously, as you can see, and hopefully this has been really useful for everyone to understand how you can claim, what you can claim, and who can claim. But you can see just from some of the companies that work with us on claims, there is a huge range of companies that claim under the R&D Tax Credit Scheme. So if any of this has even kind of slightly made you think that you can claim, feel free to get in touch and explore that. We'd love for you to become one of the names up here. And essentially, yeah, thank you so much for attending. We're going to be sending out the recording. So if you missed anything, that'll be sent out along with the Ultimate Guide ebook as well. And any more specific further questions, feel free to get in touch with us. We'll be happy to talk through those questions with you should you have them. So yeah, thanks a lot, everyone.
Cool. Cheers. Thanks, guys.
Bye. Nice. Am I leaving? Are we all dropping off? Nice.
Sorry. No worries. Oh.